Hey guys, welcome back to the channel. We're trying something new today. I'm going to be sharing with you some very interesting stories coming out about the economy. With a lot of people becoming concerned about the state of the economy as a whole right now, I think some of these issues are worth addressing. I'm not sure if a video like this is going to be very interesting. I'm not sure if you're going to like it, but it's obviously worth a try. If you do like it, give me a comment to let me know. We might as well jump into this one. I want to first share some data coming out of the UK. Of course, I am based in the UK. It's interesting to start with this story. So in the UK, we're seeing unemployment rates for those aged 16 and over being 4.4% in the December 2024 to February 2025 period. And 1.5 million people were employed, nearly 1.6 million. Obviously quite a large number. The employment rate increased slightly, which is obviously good. However, the number of unemployed people also rose by 114,000 people. And of course, there are a number of reasons for that. And we hear about all of these job vacancies which are going. When you actually have a look in the market, these are very, very challenging to get. Everyone that I know that has a job and that goes for jobs, they literally put in hundreds of interviews or perhaps hundreds of applications before they even get an interview. This is the reality of the jobs market, both in the UK and from what I hear from people, it's not that much better basically all around the world. This is a real world challenge which is happening with a lot of jobs, extremely high standards, difficulty even getting minimum wage jobs. So everybody likes to make this argument that people are just being lazy, there's all of these positions open. Number one, these positions often are not great for the employees. We're talking 0 hours contracts, we're talking minimum wage, which basically will not allow them to meet their basic needs. And then we talk about jobs which simply don't hire a lot of people to begin with because their standards are too high, when in reality it's just a minimum wage job. It's just a low-skilled job. This is not exclusive to the UK, bear in mind. And we're seeing a lot of concerns with the job market as a whole. And whilst we can focus on stories like that, it's not just those sorts of jobs which are having these issues. If we have a look at job cuts in the US recently, we see massive figures coming out in March last month. And this mainly comes as part of the federal restructuring efforts. However, let's not also diminish the importance of the sort of private sector layoffs. Layoffs are happening in the US at really, really rapid paces. And if you have a look at these figures, we can see that yes, the Department of Government Efficiency, basically the federal government restructuring, no matter what you think about that, right? That's a different point. They are driving the majority of this, nearly 80% of the job reductions. However, let's not forget the other portion of that. This is going to be public sector work, private sector workers. This is going to be people who work for employees. This is just a reality of it. And do bear in mind that these figures that we are seeing are actually quite large. The first quarter of 2025 saw 497,000 cuts announced nationwide, the highest quarterly total since the first quarter of 2009 during the Great Recession. Is that in itself something to be concerned about, guys? I'm not going to answer that question because I don't know. I want you guys to let me know your thoughts on this in the comment section, right? It certainly does not sound good. And people can make this argument about, it's just a reality of business these days. But let's just have a look at the factors and let's have a look at some of the companies which are laying off workers at massive rates in the last couple of months. This chart goes all the way back to 2024. Actually, it's a 12-month chart roughly. And you can just see the businesses, the amount of employees which are being impacted. And this just factors in the tech sector, I believe just in the US. So far in 2025, there's been 253 layoffs at tech companies with 50,000 people impacted. And that equates to about 447 people per day. In 2024, there were 1,115 layoffs at tech companies, with 238,000 people impacted, and of course that equates to just over 600 per day. These are not insignificant people, or positions, let's say. And again, just factoring in on that point, people, right? This is people. These are people. These are real livelihoods that are being impacted. These are jobs that are being impacted. It's just a difficult position to be in the market. And if you have a look at the companies which are obviously letting workers go, you will see some big names in there that you probably recognize. Going back to 2024, Intel, Dell. Even in this past couple of months, we're seeing companies like Microsoft laying off workers. We're seeing so many businesses which you are probably aware of. HP. We're seeing so many of these big businesses laying workers off. And then we hear this argument from people who perhaps have a more secure job or tell young people, just get a job. And of course, some jobs can still be found. Let's not make out like it's impossible. But this is the reality for a lot of people in the jobs market, guys. This is the truth of it. I hear it from you guys in the comment section all the time. And now the figures backs this up. This is just figures coming out of the US, guys. Imagine this in Canada, imagine this in the UK. So many different markets. It's not just a case of people being lazy, it's not just a case of people not trying. It's a much more complex discussion than that, and it's a discussion that we need to have, especially in these tech companies. Some of them have actually admitted openly, yeah, the reason why we're laying off people is because of AI. AI can do your job better than you can. It's true. Of course it's true. And of course businesses are going to do it. We have this idea that, well, AI won't take jobs. It's already taking jobs, guys. It's already taking jobs. Why would a company like, for example, I'm not going to say them specifically, but say Intel, Dell, Microsoft, why would they have X amount of employees doing something that a robot could do 24 hours a day and is a one-time investment? As an employee, you have workers' rights, you have all of these different, essentially to a business, issues, right? These are going to be issues for a business. It's more complex for them to manage. Why would they want to do that? No one wants to do that. So of course they're going to look to AI, especially as this starts to develop. This is likely going to become more and more of an issue. And then we factor in the economic downturn, which likely makes it more desirable for these businesses to even drive to AI in the first place. This is just a reality of the situation. Then we've got some little things, right? Frozen pizza sales surging, echoing the 2009 recession trend as Americans cut back on dining out amid economic strains. And this is true, again, all around, at least the Western world, probably all around the world. This is true. People just don't have the money anymore. We hear it all the time. You guys probably know it. People do not have the spending power that they had, let alone 5 years ago, never mind 10, 15, 20 years ago. The economic strain that a lot of people are facing right now is certainly coming to a crux, where of course it's a privilege, but people don't have those luxuries of doing the fun things that they once may have been able to do. So what's happened? Consumers reaching more to frozen pizza, especially the premium option, amidst the economic unease, according to a report by Business Insider. The pattern has been noted in past economic downturns as well. During the 2009 recession and the 2020 pandemic, frozen food sales, particularly frozen pizza, increased significantly, according to market research. So, what do you expect, right? Why does this matter? Well, it matters because anxiety stirs up once again, meaning that consumers lean towards eating at home and stocking up on food from the frozen grocery aisle. This trend is echoing a more home-centric consumer behaviour, driven by factors such as inflation and ongoing global uncertainty. This is just the truth, right? We're seeing all of this tariff-related issues. Just have a look at the stock market. A lot of you guys asked me in a previous video, do I have any involvement in the stock market? And the answer is yes. I follow it, and I do invest when and where I see fit. If you guys have been in the markets recently, just look at yesterday. S&P down 3% in a single day. And this is just normal. Does this look like normal behavior to you? It looks like value being lost from the US markets. It looks like value is being lost from the world markets as a whole. So what do you expect? When people are very, very well aware, just going back to this article, the reality of their jobs being impacted, the reality of losing their jobs, the reality of all of these different issues, it's of course likely that people want to cut back on spending. And we're not just seeing this happen in, say, food. We're seeing this happen all across the economy. Consumers are actively worried about a recession because of the tariffs, because of the economic downturn that we were realistically facing before this, right? There's been alarm bells warning for quite some time. We'll get back to this in a second. But I'll bring you back to this that I think I've shared it with you before, guys, right? Or at least I've shared the statistic. Nearly 90% of fund managers say that US stocks are overvalued, the largest proportion who believe this since 2001. Now, at the same time, I want to point two things out. Number one, this was published in February, so quite some time ago. And number two, 90% of US fund managers, nearly, roughly, get it wrong. We know that most hedge funds lose money. However, this is a large percentage. And if you have a look at the stock market, even I've said this, I'm not an expert in any regard, and you shouldn't listen to me for any kind of financial information, as I'm sure you'd expect. But I've been saying this for a while, right? The US markets are at all-time highs. Does it feel like the global economy is at all-time highs right now? Do you feel richer than ever? Does it feel like it's a more prosperous economic climate than ever? A lot of people are probably going to say no to that question. So you've got to ask the question, is this realistic? Is this just a blatant fact? Do you expect this to be true anyway? There's a very strong argument to say, yeah, what do you expect? Anyway, so according to the According to the figures, a record number of US fund managers or fund managers see US stocks as being overpriced, according to a Bank of America February Global Fund Manager Survey. This includes 205 panelists managing $482 billion in assets, and that found that 89% believe that US stocks are overvalued, the highest level recorded since April of 2001. So, let's just take a minute to think about that, right? That's not an unsubstantial amount of people who believe this. And again, when you look at the broad market trend, especially in correlation to the real economy, it feels like the stock market and the real economy are very, very detached at the minute. And as stock prices start to essentially crash back down to lower levels, it's arguably a more realistic reflection of where the economy truly is right now. And do bear in mind at the same time, like I say, we're seeing consumers become worried about the recession. Tariffs are sparking a massive degree of uncertainty, and households all across the spectrum are becoming worried about tariffs, a recession, and stock market volatility. People who do not invest in the stock market see it as some sort of a mythical thing, right? Oftentimes I talk to people who don't invest, they think that the stock market is something far detached from them and it has no bearing on them at all. It actually does. Obviously, it's going to have some impact. It affects the amount of money in circulation in some ways because, again, if businesses are investing in themselves, they might be expanding, they might be employing people. So it means that there's more money for you. It means that there's more job opportunities. If the stock market is not working very well, and if funds become being pulled and companies have less money to play with, and investor confidence dwanes or drains, how are companies going to manage that? Well, they're going to want to make their books look as attractive as possible. Also, at the same time, people who have pensions, people who have retirement funds, it does affect you, right? It does affect you, because oftentimes those funds are invested in assets like US markets. So it does actually affect everyone in quite a steep way. And then that's not even considering the sort of knock-on effects which can happen a lot because of these sorts of things. So let's have a read on, right? So 83% of consumers apparently anticipate making changes to their shopping behaviours in preparation for the new tariffs. Nearly 48% of consumers say they'll look for sales or coupons, followed by delaying purchases until prices stabilise, buying fewer imported goods, and 31% expect to stock up on items basically at the tariffed prices. 25% say that they're switching to US-made alternatives. In other findings, shoppers are most worried about tariff-related price increases. Essential groceries will be affected. Around 60% of households are concerned. So many different issues, right? So many different issues. Prices are going to increase if these tariffs happen, and of course, it is going to affect US consumers. This is just the reality of it. If prices increase more and more and more, it's going to drive inflation up. It's going to make it harder for people to buy things. And again, if we have a look at the broader business market, and this is perhaps related specifically to the US, we're already seeing companies making changes to their operation models because of these tariffs, or at least because of concerns regarding them, right? Companies having to halt production of certain things because they're made outside of the US. Companies talking about significantly lower profit margins. If all of this does happen, it's going to impact more and more workers. This is just going to become the reality, the norm. And again, we're talking now more about the US markets, but this sort of stuff has impacts. We're seeing the tariff impact actually affecting businesses in the UK, obviously businesses in Canada and Mexico. It's going to have a big impact globally. So we can talk about what's going on here in the US and we can make out like it's not a big issue, it doesn't really affect us. And to some degree, not so much. But does it affect us to a degree? Yes. Is it something worth paying attention to? Absolutely. This is the reality of the situation right now, guys. And again, we're going to likely see more and more businesses cutting back on their spending. It doesn't make sense to keep employing people. It doesn't make sense to expand when the economic climate is so difficult to navigate. So that's really all I have to share with you today, guys. I don't know if this has been an interesting video. I don't know if you enjoyed it. Let me know in the comment section what you thought to it. It's obviously a very new style. I'm not saying that I will or won't make videos like this in the future. I just wanted to try something new. So we'll see how it does, guys. Let me know your thoughts, of course, and that's really it. Thank you for watching, and I hope I'll see you again soon. Goodbye for now.